What's going on, guys? Welcome back to another video. So in this one, not only are Elon Musk and Cathie Wood calling out Jerome Powell right now, and honestly over the last week, but we also have a very important day tomorrow with the CPI data, essentially the inflation report coming out before the market opens. We're going to be going over some of the expectations that some of these large institutions have. We're going to be going over exactly where to be looking at on the charts to see, okay, these are some of the key levels that we need to keep in mind. And we're going to be touching briefly on the energy crisis and how this relates to everything at the end of the video. So again, guys, if you do enjoy the information and analysis that I provide for you guys in these videos here, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And again, guys, make sure you guys hit that subscribe button too and turn on that notification bell so you're notified every time I post a new video. So let's get right into it here and take a look at the overall market. Now, usually what we look at here on the SPY is the daily time frame, but we are seeing some interesting things start to happen on this 4-hour as well. Now, very recently, we did see this 1348 cross to the upside. Remember, most profitable EMA crossover strategy. So when we do see these crosses start to come to the upside, they do hold a lot of weight. Now, the most recent cross down that we saw here, there was a pretty significant drawdown in the overall market from around that 416 all the way down to 388, that more recent low. Now, again, we are going to be having this resistance level right here at about 420. And on the daily time frame, the 200 exponential moving average is sitting right around 416. So again, we are most likely going to see a lot of volatility going into the next 2 weeks before Powell does end up speaking to us. But again, that's going to be a trader's market. All of our people in our private group are really taking full advantage of these market moves with Pythagoras and Invictus, the best trading tools that retail investors have access to right now. And we have a lot more things coming for you guys too. So again, if you guys are interested in joining us on all the live streams, the curriculum videos, the alerts, all of the algorithms that we do have, make sure you guys check out that link down below. But going into the first thing that we need to talk about here is, well, what is the market expecting? Let me just refresh this really quickly. What is the market expecting for that rate hike going into the September Fed meeting? Well, 92% probability that we are going to be getting that 75 basis point hike. Now, that's what the market's expecting. And I want you guys to keep in mind that probability and the 75 basis points when we start to talk a little bit about Elon and Cathie and essentially their expectations on what they think the Fed needs to do going forward and how they disagree with the actions that Jerome Powell has taken and exactly why that is the case. So when we come over here as well, though, I do want to prepare you guys for what we're going to be getting tomorrow for the inflation data. So CPI August forecast, negative 0.2% month over month, 7.9% year over year, excluding food and energy, up about 0.2% month over month or 6% year over year. We expect headline inflation to fall 0.2% month over month, which would be the first decline in headline CPI in 2 years. Very big deal right there. A sharp drop in gasoline prices should make up all of the deflation this month. Deflation, very key for what we are about to talk about as well. Headline year over year inflation likely slowed for the second consecutive month to 7.9%. Excluding food and energy, we expect core inflation to slow to 0.2%. This would push the year-over-year reading slightly to 6% from 5.9%. We expect a decline in core goods prices to drive most of the slowdown. Wholesale prices for used vehicles have come down in the past few months, suggesting retail prices likely declined. In this fall, likely outweighed increases in new car prices. As we go along here, again, essentially the last thing that they mention here is kind of their outlook from Credit Suisse. Again, results in line with our forecast would be slightly below current consensus expectations, but probably not enough to shift the Fed's hawkishness given recently better than expected ISM and employment data. Fed officials have been open-minded about either a 50 basis point or 75 basis point rate increase, and recent press reports point to a higher likelihood of 75 basis points. So this data is going to be coming out tomorrow at 8:30 a.m. Eastern. Once this data comes out, there is going to be a lot of market movement. Now, what the CPI report is essentially going to give us is it may not give us that indication, very similar to what I've been saying and what Credit Suisse has come out and said here. It may not give us an indication of what the actual rate hike will be because, as I've just shown you guys, the market is pricing in that 75 basis points, but it is going to give us an indication as to what type of guidance or what type of statements that Jerome Powell is going to be making going forward, and that is going to be incredibly important. Now, let's get into this situation with Elon Musk and Cathie Wood right now. So when we look at this tweet from Elon Musk, a major Fed rate hike risks deflation. Now, when you think about deflation, well, that's going to mean prices are going to be coming down. Now, you might think that's a good thing, but there are a lot of basically unintended consequences of what happens when prices start to fall down rapidly and you go into a deflationary environment. Now, what is the likelihood of this? Well, we're going to talk about that in a second, but I want to kind of go over this article that Cathie Wood makes some pretty interesting statements in. So ahead of key inflation data, Cathie Wood once again reiterated her opinion that deflation represents the bigger long-term threat to the economy. The comments came as Wall Street gears up for the release of consumer and producer price data due out later this week. Wood warned against deflation in a tweet put out on Monday. Deflation in the pipeline heading for the CPI, PPI, PCE deflator from post-pandemic price peaks. Lumber down 60%, copper 35%, oil 35%, iron or 60, lots of different components here are seeing significant decreases. ARK's CEO and CIO is not the only one raising a red flag about deflation. Tesla's CEO Elon Musk, again, just like we have said, is also calling and basically calling attention to this risk in the overall market here. Now, when you think about prices coming down, being in this inflationary environment, yes, prices coming down would be a good thing. The issue is as we come over here, typically deflation is a sign of a weakening economy. Remember, the Atlanta Fed has just come out and slashed their GDP estimate recently as well. Economists fear deflation because falling prices lead to lower consumer spending, which is a major component of economic growth. Companies respond to falling prices by slowing down their production, which leads to layoffs and salary reductions. So even if there's going to be lower prices, well, people are going to have less money to even spend on those goods anyway. So you create this sort of wage spiral on the way down where even though the prices are decreasing, well, people's disposable income is going to be decreasing as well, as I've shown you guys in some previous videos here. Now, here's essentially where this risk comes from. Now, is it deflation? Not necessarily, in my opinion. It's more stagflation. So what we could end up seeing is not this significant price increase that Cathie Wood and Elon Musk are actually talking about here. Yes, the Fed is going to continue to raise interest rates to try and get inflation under control. And as we've talked about, the main risk here isn't that they take these rates too far. It's that they back off too early and let inflation continue to run out of control. Now, we have this energy crisis going on with Europe right now, which is really going to be a key factor going into these winter months because, as we've said before, just because oil and gas prices have come down does not mean that they cannot come right back up very, very quickly. Now, what could end up happening here is that the Fed continues to raise these interest rates or maybe even backs off a little bit, but still in a rising interest rate environment. Now you see more unemployment, people have less disposable income, but prices are still actually high. Stagflation is really the risk here. It's most likely not going to be deflationary, even though you are most likely going to see prices come down. Now, the one risk here that would be kind of out of left field that could lead to some of these different crazy moves happening is that Russia and the Ukraine situation somehow gets resolved, all the pipelines, all the oil delivery somehow gets back to normal. You see oil prices drop, and then you see things start to get really, really interesting from there, further pushing prices down very, very quickly. Because remember, again, oil is in a lot of different things: transport, gasoline, electricity. Oil has a giant effect on the overall economy. And if we were to see an event like that, yes, we could end up seeing some really crazy things happen in our overall economy. But is that likely? Not necessarily. So what the Fed is most likely going to be doing is reading this inflation report right here, going with their pretty significant rate hike, and then managing it going forward with all of the data that is going to be coming out in the months following. So guys, that is mainly going to wrap up this video here. If you guys did enjoy the information and analysis that I provided for you guys in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. If you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So hope you guys are having a great evening. I'll see you guys in the next one. Peace.